If you story you can tell. Story. If it all fail, it's the way it's long, and someone tell. We pretend. Yes, I wish that we could sit alone, bed, someone tell.
And that's our cue.
So easy to tell.
Good morning, everybody. Happy Friday. Been quite a week, yeah. Good to see everybody. All right, we are continuing with our live stream Friday. So just want to welcome anybody that's observing and watching. Please use the chat if you have any questions, comments. My team is watching and posting those so I can take care of them. And we're happy to answer those questions. So please get involved. This is going to be an interesting start of the session here. Wow, okay, looks like things are going well for our wheat trade. Let's I got a couple of trades that I have set up, so let's take a quick look at that, and we'll jump right back to the overview. But keep in mind, today is the last trade date for the financial futures, and it's quadruple witching. Very light economic reports. We have quadruple witching all day. Of course, Baker Hughes and Fed speaker later on in the afternoon. Okay. Excuse me. So equity indexes, as we start off this session here, are all inside the prior day's trading range. Now, inside days are a little more choppy. And if you ever wanted to know when to kind of wait in the morning session, well, if you notice that price on the equity indexes is inside the prior day's trading range, that's your cue, okay? And if you're taking any momentum or breakout trades, those tend to be very short-lived. So we want to wait for some zone entries on the equity indexes, okay? So generally, when I start off our live trading sessions here, I want to find, are the equity indexes inside or outside the prior day's trading range? Now, if they all are, and I'm just going to go through them real quick, S&P inside the prior day's trading range has not broken. Okay, so it's an inside day, choppier conditions, and often can be a little more whipsaw on the price at the open. NASDAQ is inside the prior day's trading range. Tempting trades would be looking to take a breakout trade and anticipating some momentum. But on an inside day, it's often, false hope, okay? Yesterday, price did get right up to the prep screen zone. This zone can be used twice, okay? Usually it's a proximal line entry the first time, and then price goes deeper in the zone the second time. Okay, now that's just a characteristic that we often see. Okay, so inside day on S&P, inside day on NASDAQ. Russell, also inside day. I avoid taking breakout trades. Okay, and generally we have to wait till later in the session to get a better trade opportunity for the equity indexes. I know I want to keep reiterating that because some of the charts right now are looking good for a breakout trade down or breakout trade up, but often they fail during this time. Okay, that's why we're being a little extra cautious with the equity indexes. Gold continues to make a new high today. I will probably downsize. I'm still trading with 5 micro contracts on this. I took initially the first 5 off. Well, I had 10. I took 5 off earlier at the target 1 at 26.10, and looking at 26.68 as my next target. Now that's all based off of what we have a high tight base, which was on the daily chart, and we used a smaller time frame to splice into that. Trade entry was about 25.12 on that. Okay. Okay, and now we have the crude oil and natural gas open range breakout trade. Okay, so we're still got another minute before that. Well, it just happened right now. So let's mark that first 5-minute candle. Just completed. This is the one strategy we look at for trading the open range breakout. And we use a specific odds enhancer around this as we try to determine which direction we want to take that breakout. The pit session just opened. So looking at that, we want to see what the Globex range is. Okay, now the Globex range is 66 cents. We compare that to the daily ATR. Now, if that is in the lower part, say 0 to 40% Globex range compared to the daily ATR, we usually have some good trending conditions, okay? If it's in the middle, Globex range compared to the daily ATR, like about 40 to 70% in that range, usually the session will be choppy, okay? And of course, if it's a wide zone, Globex compared to the daily ATR, we look for the bull and bear trap scenario, okay? The daily chart is still pushing up. Looks like it wants to look at that 50-day moving average, which is right in a smaller time frame supply zone. So in the spirit of that, I'm going to anticipate that price is going to continue the higher time frame trend to the upside. Odds enhancers to help with that decision making. We usually use heating oil and gasoline because they tend to move a few minutes before the crude oil. So odds enhancers, heating oil, and gasoline, kind of use them, saying, are they still in an uptrend as well? And if they are, then keep trading in that direction, okay? Oops, I need to make sure that the chat is working. Okay, got it all set up. Thank you, team. Yeah, let me know if there's any anything going on in on the YouTube questions. All right. So let's set this trade up. Now with the open range breakout, we're going to look for price to break out either to the upside or the downside of that first 5-minute candle. Okay. Now this is just one strategy that we use on crude oil and natural gas. We help determine which strategy we will use in the morning for some short-term income trades by measuring the Globex range and comparing that to the daily ATR, okay? So I'm going to set this trade up. We're going to look at going long, okay, above $70.84 in the spirit of going with the higher time frame trend, okay? So I want to trade in that direction. 70.84, stop loss will be 70.53. Make sure that you understand that if you enter at 70.84, that your risk on the trade is down to 70.53. Now, I typically just trade a couple of micros on this, and I wait for supply and demand zones to come into play on that. So setting up this trade, going long, let's come over to the matrix, and we'll place a buy stop around that. And we'll anticipate once the market starts to open, that move up, and we have a target up at 71.84 and right around that 50-day moving average as well. We want to be prepared for and potentially take a profit ahead of time, okay? There we are. I think we got it now, Liz. Thank you. All right, so natural gas as well. This morning's natural gas trade, one of the strategies that we're working on is 2 hours before the pit session opens, okay? And right about that time, we see that there's where the bigger players are coming in for the day. They come in and start setting up their day. Now, the same thing we're using with the Globex range, okay? Globex range at that 7 a.m. Eastern time was about their 0.32, okay? Very often when we get the 9 o'clock open around the pit session, that Globex range expands to about 50%, usually 50%, right around that, of the daily ATR, okay? So the initial move today was to the upside. We already participated in a trade for that. I'm just waiting for another entry. And then we'll look for price to continue to the upside, even though we're going right into a little level of supply. Price may go a little deeper in that zone up to the 2.414 area. So taking that open range candle, the first 5-minute candle, okay, I'm going to place a trade on this one. And I'm going to stay to the long side. Now, remember, the distance between your entry and the stop is your risk on a trade. Make sure you understand if you're trading a regular contract or if you're trading a mini or a micro so that you understand fully your risk on a trade. All right, looks like we got filled on crude oil. Okay. Did I get in a little bit early? Looks like I did. Okay, so I'm going to come back in and put my stop loss. Okay, I'm going to keep my stop loss just a little bit tighter. No, I'm going to keep it right. I'll go down to 70 and 53 cents, which is an acceptable risk for my trading account. Okay, so the risk on the trade right now, entry at 70.84, stop loss at 70.53. I got about $58 worth of risk trading a couple of micros. Okay. Now, I don't want to downplay the micros. As you're learning, these tend to be very high, more forgiving than trading a large contract. Okay. All right. So that one's underway. Let's get natural gas. Now, if the natural gas, oh, there it is. That's why. Yeah, see, it did stretch out to about half of the daily ATR. I've got 12 cents and got 6 cents. Yeah. All right. So in the direction, let's get that one 2.381. Looking to go long. And stop loss will be 2.364. I'll put that on soon. Actually, I like using a trailing stop on this of about 0.013, which gives me about $130 risk per contract on this product. Okay. So I'll use a trailing stop on that if I get filled to the upside. Okay. And we were waiting on a trade setup here on the NQ. One of the things I want to point out about the NQ is that very often, not the specifically NQ, but the trade setup that I'm looking at here. Okay, so we have our resistance area. We have a little trap. Remember, zone entries only on inside days. It may be tempting to take a breakout trade, but as we're seeing this chart pattern here, we got an area where we have sellers just above the breakout. This happens a lot on inside days. They're little traps, okay? Getting the novice trader to jump in on a breakout and then quickly taking that away. Just give you an idea of why I chose that for the breakout and the pullback. And we just got filled on that gas. Okay, and let's come back in and place our trailing sell stop. Right now I got about $140 worth of risk. One of the things that you do each time you get into a trade is you need to acknowledge what your risk is on a trade. If at the moment you're going, oh, I can't handle that risk, that's way too big. Excellent. You have a very small loss, step aside, okay? Or a small gain, step aside if you cannot stomach the risk, okay? Crude oil, yeah, just quiet today. S&P has been bouncing around this support pretty much all morning, even and during the Globex session. We had a trade entry right off of a zone yesterday. The price went right up there and touched the Proxima line.
Order filled.
Got a nice little entry on that. Okay. All right, so the Qs and the spiders are very impactful pieces of information for the equity indexes. Okay. And with the equity indexes, they tend to move before the futures do. Okay. And remember, the stocks move first, and then the exchange traded fund, Qs, SPY, Diamonds, IWM. Okay. They move second, and then the futures adjust based on what those are doing. Okay. Currently, Qs are down 1.17 in the pre-market. SPY down $3.09. Okay. So trading at 568-ish. Okay. I want to see where that is on the price chart. Okay. Now you can put the pre-market data on this, but I like to kind of look at it without it, because I want to see where are the buyers at. I mean, I'm also looking for that leg base group of candles. Okay. Currently, price is in this area where there is a leg base. Our desired trade course, if you want to learn more about the leg base group of candles. What happened here? I keep hearing some order field there. If you want to learn more about this, we do have a class coming up called the Desired Trade, which we will exploit that a lot more and give you some details on why we use that specific group of candles. Okay. Very often, if price drops into that area, there are still some leftover buy orders. Okay. Or if it rallies up into a supply, there are some leftover sell orders. As we gather some information outside the price chart as well. Okay. I want to draw your attention that the trend, New York, the NYSE trend is kind of in a neutral area. Kind of chop. We're not expecting a lot of big movement at the open on the equity indexes. Let's see, is this today? Friday, 20. Okay. And also the NASDAQ pre-market indicator is pretty much flat. It's not gapping up or gapping down. Another indication that equity indexes are going to be a little more challenging to trade because there's no, or they'll be a little more choppy because there's no real interest in it at this moment, other than a bunch of traders wanting something to happen. Okay. But these indicators are just pieces of information. If the trend is in between the 2 point, if it's between in the middle here, extremes would be below 60 and above 2. Okay. Then we have some more volatility coming into the market. Okay. The fact that S&P, NASDAQ, Russell, and the Dow are inside days, we're expecting more choppy market conditions at the open, and trades are better off taken later in the session. This information is giving you some backup, okay? Using it as an odds enhancer to say, well, these market conditions today, I need to be willing to wait unless we get out to some of the extremes, okay? And be patient, okay, at the open for the equity indexes. pre-market indicator for the NASDAQ 100. Basically measures the upticks over the downticks on the NASDAQ stocks, much like what we see the tick doing for the NYSE and the tick Q for the NASDAQ composite. Okay. This was an indicator that was created by the exchange to help understand risk at the open. Okay. Now, what's important about this indicator is it has a 92% correlation as to traders' sentiment at the open. And that trader sentiment can be bearish or bullish, depending whether the NASDAQ stocks are gapping up or gapping down. The fact that it's flat and we're on an inside day for the equity indexes, we're going, oh, okay, not a lot going on here. Now, intuitively, you might have already picked that up, okay, that the equity indexes are kind of boring right now and you're looking elsewhere or trying to figure out what you want to do today. Using the information outside the price chart, we're able to document this over and over again to say, yep, it was choppy at the open, and these pieces of information help me fit my trading plan for this trading session around being choppier, lighter, non-directional, waiting for the session to open. The VIX is gapping down, but very small, okay? And we want to see where the 10 and the 2-year yield are. They've been a lot of focus on that, okay? We also want to make sure that they're in the right place. We got the 10-year price is above the 2-year price, so they're back to normal. For a long period of time, we were seeing that it was an inverted yield curve, okay, where the 2-year was paying out more money than the 10-year. Okay, right now they're moving up. If these are moving up, the anticipated move on the equity indexes is the inverse. Okay, they should be kind of moving a little bit lower. US dollar is in a very critical point or place going out to the larger time frame. We're right at a long-term support. Okay. So, and it's been building a lot of pressure. So if the dollar drops down into this, that often gives the stock market a boost to the upside. So kind of being very defensive, knowing where the dollar's at. If the dollar starts to rise or shoot back up into finding some supply, then we would anticipate the equity indexes to move lower. In these market conditions, this is an inverse related indicator that we can use to help us assess the trading environment and how we anticipate the markets to either rally or drop. Okay. Now we've done a lot of pre-market routine this morning, and generally I won't spend this much time on that unless we are inside the prior day's trading range on the equity indexes. Okay. NASDAQ, we do have a potential trade set up for a zone entry. We're still waiting on that at 20,083. When you look at the leg base group of candles over here on the left, we want to make sure it is in a sell territory. Okay. The sell territories help us realize where the sellers are located. It's usually above a support, a qualified support area. And when we look at that, we want to see that leg candle leaving. If it's smaller than the leg candle in the zone, generally this is a proximal line entry. Doesn't go deep into the zone, and then it gets rejected out of there. Okay. S&P looks like remember, breakout trades are elevated risk, and taking a breakout trade on S&P is going to be I'm just looking for where I'll be able to take a profit. Okay. Let's see, ticking the SPY. Okay. SPY is actually a little more bearish than the Qs, so we'll see how that sets up. I did take a trade earlier. This is wheat. I'm anticipating wheat to break out to the upside. As we noticed in what I've stated earlier that the equity indexes are inside range. So when that happens, I tend to go out and look at other products. Okay. Now we've got a lot of different futures products out there. Okay. We've got interest rates we can look at, got energies, currencies, metals, and of course our agriculture group. When the equity indexes are an inside day, look to the other ones to find some trade opportunities. Okay. So I have some set up already. Let's take a look at those. I'm looking to take a trade long on the wheat at the breakout. Okay, at 573. This will be more of a shorter term trade. I'm just looking for a small price movement, maybe $2 or $3 price movement on wheat. Okay, or 2 or 3 point move on it. The Japanese yen got within a hair. I had my entry just a tick or two lower in that zone. Okay, as the Japanese yen pulled back from and they had a interest rate announcement last night, and they left things unchanged. Okay, I think they did that greatly because the U.S. did their 50 basis point cut. Okay, so we do have a demand zone on the Japanese yen futures. We can see that the late candles leaving are bigger than the late candles in the zone. Usually you get a proximal line entry and price will come back and go deeper into the zone. Okay. So this trade is not over. If you're looking for a zone entry, okay, wait for price to pull back into the zone and then look to take it as it starts to leave. Okay. You also call that a confirmation entry. Aussie dollar looking to pull back a little bit, went into supply, just been consolidating here, waiting to see what the dollar's doing. Silver hit a supply zone, just the proximal line. It should go a little deeper in the zone, and copper's not very far behind it. So some of the metal products might be looking at a pullback to find more buyers. These little topping patterns just above a resistance often give us a clue that, hey, price may come back down to that demand. Notice the lack of any obstacles here. We got a nice, very strong price movement up, and that price movement up a couple of days ago is on very light volume. A light volume price move up. We recognize that that is a pocket of points. Okay. Oh, thank you, Liz. Liz pointed out, and one of the other tools we use, and if you're new to trading, you need to have this so you can understand a little bit more about the trading environment. Okay. Liz pointed out in our chat that the almanac has a ridiculously low odds of being a green day. Okay. Only a 28.6% chance of being an up day. Now, the Stock Trader's Almanac is loaded with a lot of statistics that go back almost 80 years on these markets. They don't tell you when to trade, but they kind of help you understand that the seasonality of things when they do start trading. So the new one should come out in, I think, late October, November for the 2025 edition. So it's kind of like, why would I buy a brand new calendar in September, October? Okay. You kind of miss most of the year. At any rate, oh, that was based on data since 2002. Okay, so a very low probability. With copper, looking for a potential breakout trade, I will use, gold as that odds enhancer. We'll look for gold to start pulling back. And if gold does start pulling back into that demand, then we can see a follow through with platinum and a follow through with copper and silver. Okay. We do want to come out and look at the platinum as well. Now, what you will notice if you start attending the live trading rooms more frequently is that when the equity indexes are an inside day, things are really kind of choppy. Okay. I slow down. We start looking for trades that are away from the equity indexes. Okay. I also notice that the equity indexes are still pretty much holding their own, not giving us really a big direction at the moment. But notice that the metals are pulling back. Platinum, silver, copper, got big red candles on a higher time frame. And the other thing to keep in mind is, look, British pound's got a red candle and Aussie dollar's got a red candle. So things are being a little bit bearish, okay, in the direction. Equity indexes are an inside day. The 10-year, the 5-year, and the 30-year also making from the smaller time frames lower highs. And we're looking for, as the 5, 10, and 30-year bonds and notes make these trend directions. Generally, what follows the bonds and notes will be the FX market and then the metals market. And then after that, probably about 30 minutes after, you start seeing big moves on the bonds and notes, we will get into the equity indexes. So it kind of follows a domino effect, one leads the other. Now, if you observe this over time, you will start using 5, 10, and 30-year bonds and notes as an odds enhancer. Now, if these are going up, that means the yield is going up. The 10 and the 2-year yield are going up, while the bonds and notes are going down. So we have that inverse relation and kind of that perfect storm environment, okay? And then we look for the dollar to go along with the yield, okay? Dollar going up, equity indexes going down. These are additional pieces of information that are outside the price chart, okay? Wow, markets are open already. Okay, so let's take a quick look. We have crude oil. Okay, taking a little heat on that one. Our stop loss is in place. Okay.
Order filled.
Oh. Wow, we got a nice trade on the nat gas. The open range breakout to the downside. Okay, and I'm using that lower range down there, 2.299. I was anticipating to move to the upside, but earlier I had a trade set up for moving lower as well. Okay. We're seeing on a larger time frame or a tick chart up here, a little more detail. Price came up into that supply and has rolled over. Okay. All right. S&P, just quietly, I still am anticipating being bearish. Okay. In holding this position, I may have to sit through a couple of wiggles as price is moving up. Ooh, NASDAQ went right up to that resistance again. Pulled right back. And it looks like the Qs and the SPY dropping a little bit here at the open. Whoa. Yeah, this is a big area. Look at that nice big gap. Okay. Now, when you have a gap that big, okay, well, the gap size doesn't matter, any gap, okay. We look inside of the gap range, okay, which would be right now, and we look for another leg base group of candles where we might see price bounce, okay. We've seen price bounce off the proximal line yesterday using the reverse leg base inside of a gap. And now we're seeing price has dropped back into the zone a little deeper, okay. Now, I want to encourage you to adjust your time frame. There may be another leg base somewhere right around this range. If that be the case, then we would look for a bounce around 565 and 563. Okay. All right, where are we now? Let's take a look at our internals. We see that there's more selling coming in, more downticks and upticks at the moment. And we're seeing our advancing issues over declining issues a little more bearish. Okay. Looks like our wheat trade is getting underway. Let's bring that up. Okay, wheat, the breakout trade. And I'm gonna come in here and put my stop loss. Now, I adjusted the time frame to find a leg base group of candles prior to price breaking out. Now, I will use that 568 level as my protective stop loss. Okay. There we go. Now my target range, I'm going to look for a profit target range right in this range here. You can see that there's another leg base group of candles. Right in this range, 579.28 is going to be my profit objective. Now things may be a little slower and a little bumpier since we have this little speed bump area along the way. Okay. See, when you look up and to the left, you can assess some of your risk by seeing where the obstacles might be. Okay. S&P price broke the Globex low. Now, one good odds enhancer with trading the equity indexes when they're an inside day is that gaps often fill the same trading day. The gap that we use is from where prior sessions closed around the regular trading hours to close, about 4 p.m. or 15 p.m. Eastern time. We see the price opened up inside the prior day's trading range, and now we anticipate that gap fill. So that gives us a direction, okay? But it still hasn't provided an entry, okay? So we need to find a leg base group of candles, find a zone within that proximity. Looks like we have right now 57.45, okay, ish. We'll come over to the tick chart and break it down, see if there's anything along the way. But we're going to look for a zone entry somewhere down in this range here, okay? Now, there are no economic reports today, so we don't have that catalyst to help us with the time, okay? Or a erratic price movement, okay? My gosh, look at the way the volume jumped up on this. What the heck? See, right around the open, I mean, we're 7 minutes into the open, and within that 7 minutes, millions of shares just started trading. Now, that's kind of odd. Okay. Usually it's kind of a slope, not just a boom. Okay. So are these folks selling or buying? Okay. And who's making that many shares and contracts trade at this time, or that many shares trade at this time? Okay. So banks and institutions are most actively involved between 8 a.m. and 11 a.m. Eastern. So we can see that they're actively involved. We want to see if they're selling or buying so that we can anticipate where to take a trade. But as you can see, there's not much movement going on here. So it's kind of strange, isn't it? With that many shares traded and price just holding that range. Another note on an inside day is IBM's up, Goldman Sachs down, or vice versa like that. That's another reason to wait and be patient. And especially with the equity indexes. Inside days are like this. NASDAQ. Okay, NASDAQ, looking at choppier things going on. The NASDAQ stocks. And let's go back here so we can see. Oh, okay, just right up. Okay, so we're going to take this down. It's a late entry. feel like I'm chasing price right now. And look, it just barely hit that proximal line. I'm just gonna refine that area. Maybe I get a shot at that. Okay. So it didn't hit my zone yet. So I'm going to use that area up here. It's a zone entry on the NQ. Direction for the NQ. It's already filled the gap. Okay. How are we doing with questions, everybody? Doing good? Okay. All right, so NASDAQ's already filled the gap, which we anticipate that to do on an inside day. And also we have S&P has not yet filled it. Russell? Okay, looking for the gap fill. And we need to jump on the Russell smaller time frame. Let's get rid of that one and let's go bring another one. Copy. And let's paste. Now what I'm doing is taking another window here and I want to splice into this. Now Russell has a high probability we're going to go up and fill the gap. Inside day, gaps often fill. I need to find a way to get into it. Can't do that with a time-based chart at this moment in time. So I'm going to drop down to a tick chart to get a little more details. Okay. And find some of those zones. All right. So Russell. Let's look down and left. Oh, we just bounced off of support, didn't we? Okay. But not a zone. Don't have a zone down here yet. Use that leg base, looks big. Okay, but it's in the right location. You can see that we have our resistance level right here, and we have our accumulation of buy orders. So we want to see if there's any leftover orders. Looks like price has used that a couple of times. Okay. See it. Okay. Oh my gosh, anybody get in the wheat? There goes wheat. All right, let's adjust. I'm going to adjust my risk on the trade. Sorry, Harvey. There you go. All right. Target for the long that we're in. Okay. First target is going to be up here about 579. If you're using Fibonacci structures, you might be looking at in a larger time frame, you may be looking at 582 and 601. Okay. What else is moving here? Wow, platinum, big drop. And no way to get into that yet. Let's bring up platinum. Aussie dollar. Bonds and notes have quieted down. I'd like to also point out, if you're trading Bitcoin or Bitcoin micro futures, okay, is a good odds enhancer with Bitcoin right now is gold. Okay. So we might be seeing gold pull back a little bit right now. Let's double check. Yep, it's pulling back, and we're also seeing Bitcoin pull back. So there's a very strong correlation with that at this moment. Okay. Now, Bitcoin is still relatively new, and we're looking to see how it correlates. A lot of experienced traders are trying to force what they know about charting and trading and stuff on the crypto markets. It's very different, whole different set of odds enhancers and things outside the price chart that influence the crypto markets versus the capital markets. Okay. All right. Crude oil. We're still in the trade. We have not been stopped out. We still don't have a lot of support from heating oil, so things are just still kind of quiet. Nat gas, I'm gonna come out of that one.
Order filled.
Okay. May still have some move to the downside. But I'm gonna grab that profit in. All right, S&P building up on it support. Now remember, breakout trades are going to be a little more elevated risk. So we need to look for that zone entry on the S&P. Keeping in mind, if the obstacle that's making me hesitate to take a breakout trade is first and foremost an inside day. Okay. So inside days are choppier, designed to take your money. Okay. After we see this breakout potential to the downside, but you have to recognize that there's a speed bump right here. We have a leg base zone. It is in the wrong location, but you can anticipate that price may get a bounce off of the speed bump. Price may get a bounce off of the leg base. But until we get back to where we have the picture of unfilled orders, buy territory, price breaking out, we'll look for a trend change when price gets back down into this area. Okay. Now, on the equity indexes, taking breakout trades are a little higher risk right now. We are anticipating the gap fill on the S&P, so finding a way into that, going back up to where the gap area is at. I'm just kind of ballparking that. Where do we have that on the 577? Sorry. Yeah, 57.74 ish. Okay, so we anticipate price to fill the gap today. Okay. Now, how we get into that trade is a zone entry. We may see a price drop. We have a leg base. Looks like we do have a small leg base right there. Okay. So I'm going to isolate that area. Okay. Now, when price comes into these levels here, these zones, when we have a trade opportunity, especially between 8 a.m. and 11 a.m., if it arrives in that zone earlier than the quarter hour, often it'll go through. So you need to watch your clock. Right now, it's right around the quarter hour. Okay. So if price gets into that zone earlier than the quarter hour, okay, we often see a small bounce and then it goes through that zone. Okay. So again, inside days are choppier like this on the equity indexes, and we have to be prepared. If you're taking little breakout trades, you might get some whipsaw here. Okay. NASDAQ. Okay, we're looking for zone entries. NASDAQ has already filled the gap, so we don't have that direction to trade it. Go back to Russell. Okay, Russell is also in that range. I'm going to look for the 88.6% retracement. Russell has not filled the gap yet. See, there's a lot of things that we are using and have documented over the years as to what are the market conditions outside the price chart that are influencing this. How do we bring in a little more safety, okay, into our trading? So Russell gap fill is right up around 2277. So this is where we plan for price to come back up to today, but we need a zone entry, okay? So I'm gonna put this order out there ahead of time, anticipating roughly right around that 88.6% retracement. I'm gonna look for price to hit this level on or around the quarter hour and see we're 10 minutes away from the top of the hour. So the next opportunity would be price arriving in the zone and at my entry around that 10 a.m. time frame. Okay. So looking to go long 22.46. Now I'm just going to use a couple of micros in here. Okay. And once I'm filled, I'll come back in and place my protective stop loss. Okay. That one's set up. And let's see, S&P. NASDAQ still really choppy. I still want to take a trade if price comes back up to that zone. See, one of the things that I like about what we do with our pre-market routine is that I know I'm waiting for something, okay? And by documenting what happens when equity indexes are an inside day versus outside day and so on, we manage expectations of when we should be looking for a trade, okay? Wow, that wheat's still doing pretty good. Just working our way up there. I know some of those ags are boring. There's not a lot of excitement around them. Okay. When the dollar starts to show strength, okay, or a price movement up, we see, especially if it's been the dollar's been going down, and we start to see that change with the commodity products based on a US dollar, they tend to rush back into some of those. Okay. So we're seeing the dollar bouncing up, 10-year and 2-year bouncing up. We're anticipating that the equity indexes may be going lower, okay, along with FX markets, metals markets. But there's often when the dollar starts to get that initial pop, there's a rush into the agricultural products, okay, just to lock in a price, okay. Copper coming down. Let's get on copper. And we're right at the breakout. We're trading a December contract, so that's the HGZ 24. We made a lower high before this breakout. If you want a little more detail, the reason I like this is price needs to come right back down and into a pocket of points. There's no obstacles here. Okay, it's already come down and touched the old resistance as new support, and maybe going lower to find buyers. Let's drop down to a smaller time frame. Smaller time frame is important, especially when you're getting the details of the picture. And what I want to point out is the structure at this point. Structure helps me determine whether I want to take this breakout trade or be patiently waiting. Structure using the support as that pivotal point, and of course all the highs, okay. And with that, yeah, 6, 7. Okay, place the order, sell short. With that, make structure making a lower high. Okay. So my sell territory. Making a lower high, I'm more aggressive on taking a breakout trade. Okay, looks like I missed my entry, but little conservative. Now what
Order filled.
oh, we got it. Okay. Now I'm gonna place my stop loss. About 4.3510. Okay. Now, these products, you do have to give some other bigger wiggle room. If that's outside your trade plan and risk, then don't take the trade, okay? Now, our direction, price breaking down, or a breakout entry. We're looking to find where we could see unfilled buy orders. Okay. We have that one underway. We got copper. What else do we have? Well, we're doing pretty good here. Crude oil is still giving us a little bit of heartburn. Okay. And we're seeing a little weakness on the heating oil. Okay. So at this time, we're almost to the 10 o'clock reversal. Okay. Or 10 o'clock Eastern time frame. If this is making you feel a little more uncomfortable, then you could simply get out of the trade. Okay. You're going to have to take a small loss. Okay. If you're willing to let your stop loss work, which I am, okay, I accepted the risk, was $58 on the trade. Okay. There may be an opportunity to take the breakout trade to the downside, but I need a little more commitment from heating oil and gasoline. Right now, we're still making higher lows. Okay. So just filling you in on a little piece of information that I'm watching there. Okay. Gas, S&P still waiting, 5 minutes away from the 10 a.m. Now, why is it important to watch the 10 a.m. time frame on the equity indexes? 85% of the time, price will change direction around that 10 a.m. time frame. So this is going to be something we watch for on the Qs, on the SPY, is that potential 10 a.m. reversal. Okay. What we're lining it up with is, if we're not taking a trade based off of that information, we just understand that that information typically happens. Okay, so if I'm expecting a reversal, then I need price either to drop into a demand zone or go into a supply zone to trigger a trade opportunity. See, sometimes we lull ourselves into a false sense where we see that, oh, that information means you need to buy, you need to sell. No, we have our rules around a trade entry. An entry we get into in a supply zone, or an entry we get into in a demand zone. Okay. We follow the rules. We're able to assess our risk ahead of time. Okay. We're also able to use the leg-based group of candles and anticipate, especially if the leg candles leaving are bigger or smaller. Okay. Especially if they're bigger, then price often goes a little deeper into that zone. Okay. Right. So watching that. Wheat, we're still in, and it looks like we got stopped out of crude oil. Okay. Now you could take the breakout trade to the downside. Okay. Which is still part of the open range breakout, but have a good idea where price is going. Use your odds enhancers and look down and left, find the next area where you have some unfilled orders. Let me walk you through how we do that. First, we find an area of resistance. The area of resistance must be qualified. And we're teaching all of this in our desired trade course that's coming up next week. Okay. And below that resistance area is our buy territory. Okay. Now, as we're looking at where the sellers stepped in and or more sell tickets were present than buy tickets, okay, we can see the price got rejected off of that area. The area below becomes our buy territory. So price using the resistance at a pivotal point made a a lower low before it took out all the sellers. Okay. When that happens, generally our demand zone, or where the buy orders are left over, is going to be in the lower 2/3 of this range. And we're going to look for that leg base group of candles down in this area. Okay, 69.51 and 69.14. Okay, so this is where we anticipate there would be some buy orders here. Now, taking the open range breakout, okay, we're still fairly close to that. And it, heating oil has not made a lower low yet. Let's get back in on this to the downside, but I'm going to let price bounce off of this area. See, this area is also a small support, and we had this area right below it, which we call speed bumps. Okay, price often likes to test the speed bumps and then bounce back up. Okay, so I'm going to sell right around that $70.53. Okay, looking for a pop back up into that area, and then I'll use my stop loss, which will still be right around that $58 on a couple of micros once, if I get filled. Don't want you to chase into this, especially if price is just testing a speed bump. Don't get the fear of missing out. 10 o'clock reversal. All right, there we go. Price drop in there. Did it arrive in that zone earlier than 10 a.m.? Yes or no? Did it arrive earlier? If it did, anticipate price to go through this zone. Remember, between 8 a.m. and 11 a.m. on these equity indexes, okay, if price arrives in a demand zone or supply zone earlier than the quarter hour, it often goes through it. Okay. So we do have one more leg base group of candles, and we're anticipating now that price will go through this one. That's why I didn't set the trade up ahead of time. Okay. I'll look for this entry. Now, this is a leg base group of candles. You need to take some notes on this. Leg base. Okay. It is a zone. Zone is not in a buy territory. So you're going to be taking on a little extra risk at this point. Okay. So I'm going to wait for price to come back down a little bit lower. Inside days, we can expect some of this volatility, and 85% of the time you can expect a price to change direction around that 10 a.m. Okay. All right. Oh man. Still waiting. Where are we in? Oh, we got into copper. Did anybody else get into copper? I'm up $100 on the trade, and I'm going to since my risk is a little bit bigger on this product, I'm going to decrease that risk.
Order filled.
Okay, and kind of trail that down. Okay. We got filled on crude oil. Okay, so we got filled on crude oil. Let me come back in, place my stop at $70.84. I'm just going to use that upper range there. It's really close to where the that VWAP is at. Okay. All right, so now we are anticipating that our stop loss is in place. We're anticipating price to come down to where the buyers are. Okay. Another little piece of information, why I didn't jump in on this trade, even though it's a leg base, okay? The time it arrived, and we're also seeing that the tick, the NYSE tick is still on the negative side, below zero. So there's more down ticks than upticks still coming into the market. Okay, I might have been a little more aggressive to try to get into it if the tick was high above the zero line, showing that there's more buying coming in on the NYSE stocks. But since it is not, I want to anticipate just waiting a little bit. Okay, there we go. I got the SPY down here, still collecting data. Okay. NASDAQ. Okay, when using or trading the NQ, you have these 8 stocks: Apple, Google, Nvidia, Meta, Tesla, Amazon, Netflix, and Microsoft. Okay. Futures are a derivative instrument and they follow the stocks. Okay. So having a good indication of whether all the stocks are bullish or bearish on a small time frame, okay, or the time frame that you choose to trade, okay, is that if they're all going up, then the NASDAQ futures will follow. Okay. Actually, the Qs will come into play first. It looks like the Qs just dropped into a demand zone down here. Okay. And we got a little bounce at it. 87% of the time, when you have that leg-based group of candles here, you're going to get a bounce. There are some unfilled orders. Now, I don't know if there's enough unfilled orders to change the trend. What I've associated that picture with is that with that group of candles, it has often been where I desire to take a trade. Okay. Now you have to adjust the time frame up or down or the tick frame to get that picture. I do want everybody to come into that class we have coming up. There is some information in our Discord room about that. Get to know what a picture perfect past trade setup looks like and the characteristics around it. Okay. Come on, Russell. Let's go back up to the larger time frame. Oh my gosh, platinum just falling out of bed. Wow, that would have been a good one. Aussie dollar coming down strong. Wheat's kind of holding out. Dollar's pushing up a little bit higher. Okay, so equity indexes should be coming down. And also the 10 and the 2-year yield moving. Okay. Ooh, look at this picture on the NQ. Now I like this this picture because we work with fractals, okay, and fractal patterns, okay. This picture right here where we had a drop and then we had some basing right there. Now you might say, well, that's pretty small, okay. Well, what that picture that we're on a 120-minute chart, let's drop down to a 20. The shape and pattern has caused me to want to take a closer look at this, okay. And as we look at that pattern on here, we see that there's an area of resistance. Okay. Now, generally, these patterns right here, where we have these resistance, and we can see that there was an earlier area and we got a small pop out. Okay. The price pattern that I'm exploiting, price drop down and we start getting these little bounces. Got 3 touches and then price popped up just a little bit more and then we anticipate price to go lower. It's almost like a you're getting to see a picture of a drop-based drop being formed, okay? But when a drop-based drop is being formed, okay, you'll see that most of the touches of resistance are on the left-hand side. Then price often pops out and then drops, okay? So a lot of times where I got caught was, oh, it's just resistance, let's take the breakout trade. But this breakout trade often goes against you quite easily, okay? Now, what's nice about these patterns, when you find them in the right location, okay, is this is more or less a continuation pattern. Okay, you can see there's kind of a triangle shape or megaphone or things like that that people would associate that with. Ascending, descending triangles and so on, okay? But very often, this pattern forming just below a drop in price, okay, this continuation pattern often evolves into a reversal. Things to understand about continuation patterns is that 83% of the time after a continuation comes a reversal, okay? So this is where we can look at using this move up, that's this one here. Right? And very often we can use Fibonacci price extensions to anticipate where the extended move may come into play. So the Fibonacci price extensions that I look for are going to be outside of the 0 to 100, and we're going to use 113, 127, 1618, 224, 2618, and 314. Now, the 113 extension often is associated with a momentum reversal. 127, 1618, head and shoulders patterns. 224, 2618, and 314 would be associated with a V-shaped reversal. Now, momentum reversals and V-shaped reversals are more aggressive than a head and shoulders pattern, okay? Head and shoulders take a little bit longer, and so the numbers are associated with the characteristic of a price move as well, okay? So as price starts to pull back a little bit more, and I want to modify this here. I don't need the numbers per se at this moment. Let's put the values on it, which are the percentages. Okay. So as we start to break down, we got the 113, we go, okay, if price goes through that very quickly, then we got the 127, 1618. Now, with this picture and the anticipated price drop here, at each one of these price levels, we want to look over to the left. Okay, so let's just extend those lines over to the left here. What are we looking for over here? Well, we're looking for these prices. Let's get rid of this noise so we can see it. To line up with a leg base group candles. Okay, preferably being in a buy territory. Okay, so turn on the those kind of, so we can see the leg base. Wow, looks like it's, we have one right close, which might be that momentum reversal coming in, okay? And then we have one, a leg, base, leg out and base. We can see that with this leg base group of candles, the leg candles leaving are smaller than the leg candles in the zone, so it should be a proximal line entry. So this one, also a proximal line entry where we have the 113 extension. All right, so as I'm plotting this out, we're planning our trade, okay? We may see a bounce around this 113 extension after it breaks that support. Okay, we do have a leg base. We'll go back and reduce our time frame down to a tick chart to see if we can refine our risk a little bit more. If price goes through these levels, okay, then we're going to be looking for that 261 extension, and that price level is 19,814. Okay, so we're using measurements, we're using patterns, we're anticipating where would we enter. Okay, well, we have a proximal line entry, we're just right on the 113 extension. Price should rocket back up off of that. Okay, so let's down to the 120. So we started all that analysis by seeing a shape or pattern, and then we used our trading rules to get more detail. Okay, let's see, Dow's pushing lower, Russell pushing lower. Are we getting close to our entry on the Russell? Russell still needs to fill the gap. Ooh, Dow coming down to a nice zone. Remember, breakout trades are elevated risks. That's why I didn't take it. The Dow futures dropping to a tick chart. We got a nice rally picture, 41 or 42, 182, 42, 139. Okay. Price did not arrive on the quarter hour, got into the zone earlier. You notice it came into the zone earlier than, or sorry, yeah, it got a bounce off the proximal line, and now it's gone deeper into the zone. I'm going to take a stab at this one. We're right on the quarter hour. Price hit the proximal line on the quarter hour. Okay. And now the Dow is come back into the zone, gone deeper the second time. Let's look to take a trade long on this. Those were Fibonacci projections up there for all-time highs. If we take a long on this trade, our stop loss needs to be at 42.27. The other side of that zone. Okay. We still need a gap fill on the Dow. It has not filled yet.
Order filled.
And then I'll come back in. I'm gonna place my stop about 42.60. And actually, I'm gonna either use the distal line or use the low of the session. I'm gonna use the low of the session at that 42.248. Okay. Let's get rid of some of this information over here, just so we can see that picture. Okay. Now, what we teach at the TMI here is a forward-looking technique. The information needed on the left-hand side of the chart helps us make that choice. Okay, we got resistance and we have buy territory. Okay, so our leg base group of candles was located inside the buy territory. Okay, 87 out of 100 times, you'll get about a 1-to-1 bounce off the leg base. Just a group of candles, okay? But drawing out that picture helps train the eyes in what to look for and planning your trade ahead of time, okay? By understanding the leg base group of candles, the leg candle leaving, if it's bigger, the zone can be used twice. First time is a proximal line entry, and second time price often goes deeper into the zone. Now you might find this guy, oh my gosh, what's happening here? This is so methodic. Well, it really is when you understand the picture on the price chart. These are where the banks and institutions have leftover unfilled orders. As we went through the pre-market information gathering today, We noticed it was an inside day. We could only take zone entries and breakout trades were elevated risk. And we anticipate the gap to fill the same trading day. Okay. So our first target is right up here around the gap fill. Okay. Now, as you notice, the price is moving up to that area that we have another 3 touches over here. Okay, so we have another resistance area. It's confirmed resistance. Okay, we have a gap fill. Now we're just looking, are we going to start cranking back to the upside? Okay, well, that remains to be seen. The gap fill and resistance are in our path. Now, if you know that, you're able to kind of swerve around the obstacles in the road, okay, or take a profit at those points. Other ways to take a profit mechanically is by taking the shape and the pattern here. We go from point A to point B and then back down to point C. If you like measurements, well, grab this Fibonacci measuring tool using the distal line of the leg base, measure from low to high, and often you'll see that 88.6% retracement as far as a measurement will come into play as well. Oh, okay. Target 1, 85% chance we'll hit that level, 42.24. That's just the, and it's also old support, okay? Gap fill on an inside day. See, there's a lot of things to get to know about your trading price, okay? It's the patterns, finding the entries, managing your risk, looking for the profit objective, and so on, okay? So what we're going to do next Friday, I believe is it next Friday, team? Next Friday, let's see, I need to come back here. I'm just going to bring this over. Okay, we have this class that we have. It's called the Desired Trade. It's one of our center stage classes, okay? This is to make you aware of the picture on the price chart. It's to get you started, okay? So this is coming out next week on the 20th. You will get a recording and some helpful diagrams to help you validate what we're showing on the price chart. Okay. Whoop. Let's see. We had that one. And we have a special going on. So check the website. Okay. There might be some links in the chat that you all can look at as well. But this is getting to know what the desired trade looks like makes a whole difference. Okay. Because if you know what a picture perfect past trade looks like, then you can start to forecast the right side of the chart. Okay. Now, looking at a time-based chart, you're going, what the heck? Why did price change direction right there? See, by breaking down the time frame using a very specific method and approach, there's a lot of pieces of information that you're not seeing on a time-based chart. Okay. And the time-based charts do work. They just take a lot longer. Okay. But all of these patterns are fractal. Okay. They're fractal. So it's the same pattern that keeps repeating over and over and over again. Okay. Target, gap fill, and resistance to the upside. And always remember, you can take a profit anytime you like. Okay. What else are we in here? We got the Dow's doing good. S&P. Oops. Yep, look at that. Price got into the zone early. I just want to recognize that. Remember earlier we were talking about the S&P getting in and taking a long off of that zone. Price arrived early, got a little bounce, okay, and then failed that zone. Okay. So we're still looking at that little bounce in this area. As we look over to the left, that was just a test of the speed bump area. Okay. Now we have another demand zone a little bit lower for where we can participate in a long entry. Okay. But take note, that leg base group of candles is not in the buy territory. The one lower is. Okay. So depending on your trading style and whether you're aggressive or more passive trading in your own trading plan, okay, less aggressive trades are in a demand zone or a demand zone within the buy territory. More aggressive are going to be having a leg base, and they're not in that buy territory, so on. Okay. Come on, Russell, come back. Oh, there's a good chart. So a picture on the Russell. We still have our demand zone entry at 2246. How are we going to get to that level? Well, look at the price pattern here. We broke support a little bit. Okay. And now price has started making a base. We got 3 touches right now to qualify our resistance area. Right above that resistance area, we do have another obstacle. Okay, we do have a gap fill, which we're anticipating. Okay, actually, see that little area right here? Okay, where price dropped, shifted around, and continued to drop. That's what we call a little speed bump. Okay. Okay, so with a speed bump, viewing the right side of the chart, we often get this little pop above, and then price goes back down. Okay. Now, to get that move back down, we would need to see that most of the time the 3 touches are over on the left versus the right. Now, these 3 touches are across the board, and we just made a higher low, a little different picture. Okay. Due to the time, we're right at the bottom of the hour. Okay. Price still may, recognizing the structure, the speed bump becomes less of an obstacle in this scenario. So we may anticipate a price move where we get back up to that resistance area and the gap fill. Now we are mapping this out, but that doesn't necessarily mean I have a trade entry. Okay, if I'm anticipating the breakout, then I need to get prepared for the trade. Identify the 2267 as that breakout entry. And prior to that breakout, I need to have a place where I can have my protective stop loss. Okay. So breakout trades are in nature elevated risk. Okay. So we know we're taking a little more risk on the trade. My stop loss will be down at this little pivot point, and often it is the distal line of a leg base that must form. We just had it prior to the breakout. Okay. So this is leaning a little bit more towards me wanting to take the trade long. My stop loss, 2261. My entry is going to be above this last little high. And I'll look to go long 2267.5. Okay. Now, once I am long, price is triggered. My stop loss will be at the distal line of this leg base. Anytime you're taking breakout trades, you need that leg base group of candles before the breakout. Our target, gap fill. Okay. We see this area has a lot of filled orders. If we get our entry, that's going to be our target, and we have resistance, and then we start the whole thing over again. Okay, most of our touches are on the left. See, we start building from the smallest time frame using the same patterns, and then we start building out to bigger patterns. Okay. Okay. So give us your feedback. If you like what you see and the structures and the patterns of things, we're happy to share a lot more of that information with you. What did we get into? We got Dow. Okay. But this is, we're just about ready to conclude our session, and I want to encourage everybody that's watching the videos and checking us out. If you can like and follow, and if you do like and follow, we'll give you some access to our Discord room where you can come in and kind of observe and see how our community in trading is doing as well. One more thing before we wrap up, okay, because I'm just noticing this price pattern over here. We have a support area. And we have that resistance. Now notice how much price spent back and forth in this range. This is a range, another obstacle or lack of obstacles here is what we would call as a dead space. Now, the dead space just simply means there's no obstacles in the way, and price should easily cut through this area going back up to the other side of the resistance. What this really implies that all of these orders are filled, okay? They're all filled. So price should easily go through that range here, okay? All right, I hope you guys enjoyed everything. I'm going to head back over to our Discord and in our community trading room where we can do some active trading as a community. There were several lessons we could have learned today and throughout all of this, especially about trading the equity indexes on an inside day, okay? Y'all have a happy Friday, and I look forward to see you in the next session. Have a great day, everybody. And thank you, team, for being there and all your support. Have a good day.